BBC Sounds. 5 Live Drive.
Claire McDonnell and Tony Livesey.
Welcome to Drive. Claire and Tony with you. A worrying and difficult time for people, families and businesses. That is Downing Street's reaction to today's announcement of a big rise in interest rates. The Bank of England is increasing the base rate to 3%, a rise of 0.75 percentage points. And that's the largest increase since 1989. Here's the Chancellor, Jeremy Hunt.
Today's news is going to be very tough for families with mortgages up and down the country, for businesses with loans. But there is a global economic crisis. The IMF, the International Monetary Fund, say a third of the world's economy is now in recession. And the best thing the government can do if we want to bring down these rises in interest rates is to show that we're bringing down our debt. Families up and down the country have to balance their accounts at home, and we must do the same as a government.
The Bank of England is raising interest rates again as it tries to tackle the cost of living crisis, but the rise will mean some homeowners face bigger mortgage payments. It's also warning of a 2-year recession in the UK. The bank's governor, Andrew Bailey, has told the BBC that the UK's standing has been hit by the Truss government's mini-budget.
I would say this, I'm afraid, I will say this, and I think, it's easier to lose confidence and it takes longer to regain it. And I think the UK's position was affected. I was in Washington 3 weeks ago. I think you were in Washington 3 weeks ago. It was very apparent to me that the UK's position and the UK's standing had been damaged.
Let's speak to Seren Theroux there, Economics Director for the Institute of Chartered Accountants in England and Wales. Good afternoon.
Good afternoon.
I mean, it's a bit of an understatement. I don't know whether you heard, we just had a 5 Live listener called Vanessa on who's seriously worried about losing her home. She's on a variable rate. She's self-employed. She, can't afford to sort of pay the bounce back loans that she was given. A worrying and difficult time for people, families and businesses, so says Downing Street. But this is going to send some people under, isn't it?
It's a really difficult time because what you're seeing at the moment is not only are interest rates rising really sharply, but you're seeing general cost pressures, energy bills, food prices all rising steeply. And that's before we get the autumn statement in a couple of weeks where we like to see tax rises and spending cuts. So it's really difficult periods. And what we're seeing is the government the bank trying to tackle inflation by rising interest rates. But of course, as the last caller mentioned, there's a lot of collateral damage to doing that.
Yeah, let's talk about that collateral damage, because you raise interest rates and the economic theory means that, you slow down, you take the heat out of the economy. But what you do is you put the cost of borrowing up quite significantly. And we know that many, many people just in the cost of living crisis are getting by day to day, week to week, month to month, borrowing on credit cards. Vanessa was saying, I tried to remortgage. This is how people are trying to get through. How is this going to help anyone?
That's really a valid point, because the first thing to say is that the inflation at the moment has been caused by global pressures, such as the energy price shock we're seeing globally. And interest rates can't really do a lot to deal with those upfront inflationary pressures. What the Bank of England are trying to do is to make sure those inflationary pressures don't become embedded in the economy over the next year or so. But there is a cost to that, and the cost is unfortunately high costs for people like your last caller, particularly more people who have loans, both for business and also for businesses as well, many of whom would rely on variable rate loans to support funding for their business.
OK, but we can look at the war in Ukraine, but lots of people are pointing the finger back at the Bank of England and saying, if you'd actually slowly started to raise interest rates a while ago, we might not be in this kind of situation where people are feeling this really, or going to be feeling this very sort of severe economic shock to their finances. Is there any validity in that?
Well, certainly the Bank of England are much slower than, for example, in the US, where they're much more further ahead in their monetary policy tightening. But what we've seen over the last year or so is a series of inflation shocks that have pushed up inflation, both from the end of lockdown, where we saw supply chain disruption, through to the war in Ukraine, which has created a huge energy price shock. So these have added to the upward pressure in inflation, and that has taken a lot of central banks by surprise, particularly the Bank of England.
Is it all all of this, because we've got this interest rate rise, the biggest since the 1980s, and in a couple of weeks' time, we're led to believe there are going to be tax rises across the board. So most people will feel an increase in taxes. Now, and a cost of living crisis with also the Bank of England, the governor saying, we're going into a 2-year recession. You kind of wonder how that, brings about a healthy economy, a productive economy, when people are really going to feel the pinch and some people are going to struggle to continue living where they are living. Is this all about the sort of macroeconomics of it, that, we as a country are seen by the rest of the world to be getting on top of our financial situation, even if it sends some people under? Is that the trade-off?
Yeah, that's right. Certainly, markets are really sure that monetary and fiscal policy are now going to be moving in the same direction. But the pace of tightening we see, is really significant. And that means the damage to the economy is going to be quite large, which means we're going to have a longer, potentially deeper downturn than would otherwise be the case. We've seen this really perfect storm of costs facing households, also businesses as well, from higher interest rates, tax rises, as well as other cost pressures going up at the same time.
Suren, thank you so much for joining us. We're going to be talking about this again after 6 o'clock. Suren Thuru is the Economics Director for the Institute of Chartered Accountants in England and Wales. Keep your questions coming in, because we've got a mortgage expert coming on in the next hour. I know a lot of people are worried about what this rise in interest rates is going to be doing to your monthly costs on that front. So 85058 on the text. 13 minutes to 6. 13 minutes to 6. 13 minutes to 6. 13 minutes to 6. 13...